the world with no regret, and that's all profit.
Done did it again on the hater, man. I don't think they were ready for this.
They gave y'all the blueprint, man. Just get up and go get your bag. That's how you gotta do it. All hustle, no love. You gotta work for this.
What's up, traders? It's your boy Ace Boogie coming to you live and direct. Today I want to talk about a trade I took on IMPP. So IMPP, man, this has been an incredible runner all the way from the sub-dollar area. I think it was about 20-30 cents all the way up to $10. It's like a freaking, I want to say 1,000% move. My fault, a 1,500% move. Power of penny stocks here, and this is just over the course of a few weeks. You know, it started in the end of February, and now here it is mid-March, and you see where we're at. So I took a trade on it today, and I thought it was a well thought out thesis and a well planned out trade in the moment this morning. So IMPP today, it had a first green day bounce pattern. And when I say first green day bounce, I mean a first green day bounce in the morning after a multi-day sell-off. So whenever these penny stocks run up and they have their big down day and they sell off consecutive days after that, we look for that bounce day to come into play, and that's exactly what we got here today. It's important to know on the first green day bounce that it's not an all-day hold. It's not an all-day hold at all, and you got to be quick and conservative with taking profits. And I think I did that well today. This was also a great play and a great lesson on technical analysis, because I really had to map out the levels on the intraday time frame and on the multi-day time frame to kind of figure out how I can put together this trade. And we're going to go over it now. But as you can see, it ran up and sold off two big days after the run up, and today it was having a first green day on this day right here. Today's the day I traded it. You see the tick marks. So this was green at one point in the day, but now it has since gone red. But I basically bought it close to 550 and sold, just over 6. So keeping the profits fairly conservative and to the point. So let's look at the 1 or 2 minute chart here, and you can see exactly what I did. Going back to the pre-market, I like to see where the stock did in the morning leading up to the trade. So in the morning, it was having a green day. It was going red to green. Here's the red-green area where my arrow, the crosshair is now, and it went from green in the morning to going down red down here. And it popped up green for a little bit, then went back red, and then it had a strong move green, and that was right at 7 a.m. I talk about time of day a bunch in my videos, and the 7 a.m. time frame in the pre-market is so important because so many brokers open up at 7 a.m. and we have traders that have been watching the market since 4, 5, 6 a.m. anticipating when to get in and what they're going to do once that 7 o'clock bell hits for a pre-market to be open. And that's why it's good to have a broker that's open at 4 a.m. so you can take advantage of the move prior to 7 a.m. because once 7 a.m. hits, it usually starts the move for the day. So here's the 7 a.m. Move, and it spiked all the way from 480s all the way up to $5.99, $6 almost, in just a span over about an hour and a half. So I caught it a couple minutes before the market opened. I caught it like right here, this time frame. I'll switch over to the 1 minute chart. Maybe you can see some more detail. So yeah, I caught it somewhere in here. I saw it green on the day. I recognized the pattern being a first green day after a multi-day sell-off. I looked it up. It had no news. The volume wasn't crazy. It was around average volume. So I knew, hey, this one is probably not going to run crazy, but it can probably at least retest what it did in the pre-market. And I go over a lesson where I talk about using pre-market price action to determine, market trades. And I'll link that here in the description and on the video above. But yeah, I basically used that same strategy. I saw how far I can go pre-market and use that as an initial target. And I also looked left and zoomed out. And it's important to look left and to zoom out to really know where resistance is going to come into play. So if I go over here to the 15-minute chart and look left and zoom out, we can see on this area right here, let me add a horizontal line. So right here, back from March 8th, March 9th, it had resistance right in the 620s. It kind of hit the 620 area, rolled down, and the next day popped back up and couldn't break over 620, and that's what got us in that little downward consolidating channel. And so seeing that, I figured, if it breaks out over $6, because we're already in the 590s, so this area is already going to get compromised. It's already basically broken out over this area in the pre-market. But if it breaks out conventionally over $6, it can probably test 615, 620 area on the way to that resistance. And I use that as a moderate target point to kind of base my trade. So just using this resistance, looking left and seeing what it has done the previous couple of days and what areas it has peaked out at, that proves to be very valuable in trading, days later. All that price action is going to come into play. All right, so let me get back to where we're at. Oops, a little bit too far. All right. So that's the first thing I did. Before I even mapped out where I was going to get in at, I kind of mapped out how far it could potentially go and to see if it was even worth my time. Because a lot of times, newer traders and inexperienced traders get into trades and they just chops around. There's no real movement, no volatility, no range for those trades. And, that can be frustrating. So it's really good to know, it's really good to map out the potential of the trade, upside and downside prior to actually getting in. And me seeing that 620 level, that $6 to 620 level, I figured that, hey, if it dips back down to some area of support, I can see a pop back to $6 and maybe beyond. And that's what I was looking for. So when I say if it dips down, we still look back and you still look left to find support, just like we found resistance. However, when finding resistance, you don't want to look back multiple days. When finding support, you don't want to look back multiple days. You just want to look back in this current intraday session to see if there was an area where it had a strong area of support, an area that it bounced off of. And me looking back around this time, I'm trying to find that area. I was looking at the 570 area, but we were already under 575, so I didn't count that. And the next area that logically popped in my head was 550, just using my technique of $quarter, $half-dollar, $three-quarter areas. But also, you can see the price action showed that, hey, it came up, came down, and bounced off of this 550 area right here. So this was my first quote-unquote layer of support that I can use to risk off of, to potentially buy at, thinking that that area is going to hold and for it to bounce back up towards the highs. And that's exactly what happened. At the open, it faded off, dropped from the 570s below this support area right here, and dropped all the way down to the 550s. I was a little bit slippery with my entry, so I didn't get a great entry right at 550. It was closer to 560. I got an average. But then, as planned and as predicted, it bounced up, and started breaking out over these levels. And then when it broke out over the $6 level, I went ahead and took profits into that strength. So it continued. It actually came back down to the 570s and then bounced again and ripped all the way up to the 620s and actually tested that resistance level that we mapped out earlier. So, but I didn't wait for that. I was a little bit more skeptical just because of the volume and the fact that it had no new news. So I went ahead and just took the quick 10%, the quick 10% right here, without even thinking about it, without hesitation. And that's how you have to be with a lot of these trades, because if you wait too long, you're going to miss your opportunity, and then you're going to fall into the bag holder syndrome of holding and hoping. And these things usually don't come back anytime soon. So it's not a good strategy. So that was the basics of the trade on IMPP. Nothing too crazy. Definitely go back and watch my video on how to use pre-market price action to determine market trades. That's one of the key fundamental lessons I use on the technical analysis. And definitely go back and study the patterns that I offer in my class. That first green day after multi-day sell-off is a strong pattern, it's very predictable, and it's profitable if you're prepared. So just want to leave you with that quick video. If you have any questions, you can hit me up on Instagram, Twitter, aceboogie2488, or on Facebook, YouTube, G5 Trades with a Z. Peace. I'm out.
I go to bed thinking about the cash, then have nightmares about my failures, then wake up and secure the bag. So adamant about the next step.